some sort of similar logic as what I do for selling strategy on the DAX strong bar close, strong daily bar close strategy. So basically what that is basically cycling through stabilize as time frames, meaning like to form just some sort of a bias to sort of not rely on, but like fall on, like stabilize as some sort of stable, so you know what's kind of going on, instead of just you know, like for example, right, Divinity just trades literally, he's completely based on his experience, and he literally uses the 15-minute time frame and kind of can get some sort of a sense straight off just looking at the 15 time frame of what direction to go based on. Now you could do that, but it's better to kind of have some sort of other I don't know what to call it, but I know it's there in my head. But like I refer to it as a stabilizer because it kind of like, if you look at how the most recent daily bar closes the way however it does amongst the region of whatever pushes in play, relative to the daily time frame that the most recent bar close on the daily closed amongst, or somewhere at so it had to be at some region of whatever pushes in play, that you're then assessing what way it closed the way however it did at, and as a result signaling to you what sort of movements are probable / expected to occur as a result. And then obviously the 12-hour, you're doing the same thing, and then the 8 in the case of the 6 a.m. time period, 6 to 9, and then also the 4 and 2, and then the 1. So the same for the 2 to 5. 2 a.m. to 5 a.m. is an extremely good time period to trade, but believe it or not, especially on gold, it is the most predictable, high probable thing ever on gold, especially. And then you've also probably got some other time periods, but I'm not even going to bother looking at those because like the European and modern trading session is the time I've always got available. So yeah, and I don't need anything else, to be honest. Plus, if you were to trade, like for example the morning and then also the evening, it's stressful. I mean, what I can do in the morning is enough for me. But anyway, so basically what I've been thinking of is this strong daily bar close thing. I've just spat on my computer. I'm just wiping the spit off. That's a bit disgusting, but yeah. Have I got this on? So basically what I was thinking of is when you've got a daily strong close, right? So if we just go onto the daily, onto the day that we're doing. So when you've got a daily strong close, like in this day, which you would have marked up, and you're basically just, the lines just delineate a strong daily close, bar amongst the push what's in play, closing as a strong bar. In the case of a bull case, it's closing right at its highs. And in this case, it's closing right at its highs at the overextended high region of a push to the upside. But because it closed right at its highs, it's likely that further range expansion is going to occur to the upside. So, and then basically what you're then doing is you're then dropping down throughout your 12, 8, and 4 and 2 to basically see whether there's strong bias to possibly retrace first before, for example, taking off to the upside, if it is going to take off to the upside. So if we just do that, and then you'll see kind of like how it leads you. So it's kind of like, so basically it's just exactly what I'm doing with the standard strategy, cycling through all the time frames, and then basically when I land at the 1 hour, if there's a strong case for whatever way I need to see the 1 hour setting up, in that way, I'll then drop to the 1 minute on the euro and pound, and then look for a 1M non-religious overall clean structure shift. That would make sense to implement clean 2022 model, meaning FJ prior to the break or just after, and then conduct the 3-step SLR placement, which is first lining up a stop loss to the 1 candle prior. If that's good, okay, you don't need to do anything else. If it's too tight, then you'll go to 3/4 off the leg that broke structure, whether that's a chalk or boss, doesn't matter. Broke non-religious overall structure, I should say, or mention or add to that. And if that's also too tight, well then you'll go somewhere else just below. And if that's too little, then you'll just cut it. And basically what you'll do is you'll plot your R accordingly. So if you've got quite a big stop, then you'll use 2R. Anyway, so you see here you got a wick rejection at the highs of a overextended short-term push to the upside on the 12 hour. You have a reaction at the highs, you wick rejection at the highs, and you follow with a bit of a reaction to the downside. And then you just push higher and you close kind of at the highs, but with a slight wick rejection at the very high region of. You then drop to the 8, and you kind of see that, well, you do see that short-term pushes in play, and you just kind of, you have a wick rejection at the highs, you kind of have a bit of a retracement slash flip to the downside, and then you start to wick reject the lower region of a short-term push to the downside, and then you just flip bullish, and then you just impulse and higher with quite a bit of nice momentum, but then you have a wick rejection at the high region where push to the upside. Now, of course, you've got a daily strong close, so like you're also looking for longs, obviously, ideally. At the open, which on DAX is 115 in the morning. Of course, I'm referring to the CFDs, and I'm pretty sure that's when like the FDAX, which is the future, starts trading. I'll have a look just real quick. Let's just may as well also see what the euro and that's doing. Is it okay? Yeah, it's pushing lower. Anyway, FDAX. Because obviously that's the futures market. I don't know why it's not. Fucking hell, hang on. Yeah. So it opens at. Yeah, 115. Okay. I did think it was that, but anyway, it was just the CFDs, sometimes open at stupid prices, but like, yeah, anyway, the real market also does too. But yeah, so like you're then looking for a push to the open basically, and then one and non-religious overall structure break. That would make sense to implement clean 22 model on, and then basically target R accordingly if you get that. And basically, what the logic is like if you've got signs on the stabilizers time frames that form a kind of a bias to like uh fall back on two basically, like, which is your 12, 8, 4, and 2 for your 6 a.m. / 7 in this case time period. The reason I don't know what I've just realized too, for some reason on Dclose copy, which is on FX replay, you can also have the option to choose a Wanda 4 and 8 hour bar close would close at 6. So but for some reason Dclose copy closes at 4 and 8 at 7. So the 4 and 8 closes at 7. So anyway, yeah, but basically what the logic is like, so if you've got a strong daily bar close, you'll then cycle through your stabilizers time frames and see if there's, for example, just a strong bias to keep on pushing, or if there's a strong bias there that is slightly to flip and retrace bearish, that you can then look to also capitalize on with a strong degree of probability. Because like if you've got for example, the 12 a little bit kind of iffy like it is, and then you've got a strong sign on the 8 and 4, which you don't really have, but you do have signs there, then it's likely that, like, okay, over the next kind of like 4 hours, maybe it's a little bit possibly more, but possibly not. You would probably expect to start to see wick rejection starting to show at the near and end of the 4 hour bar on maybe say the 15-minute time frame possibly, and then that kind of bullish momentum on the daily possibly taking hold. Or if you just keep on flowing with the bars closing and how they're closing amongst the regional bottom and push in play, and if they still signal bearish movements, well then you'd obviously flow with that accordingly. But like you would be anticipating with a strong daily bar close amongst the region of a in play and push, in this case at the overextended high region, but still it closed right at its highs, signaling that further upside range expansion is likely. You would expect further follow through to the upside and further range expansion to occur, but it might still retrace first, that you could then capitalize on accordingly if you had sufficient signs to like warrant doing that. So like this is basically implementing it live. Well, not implementing it live, but like actually implementing it how it would go. And yeah, I would look to trade this definitely. So you see a strong close, and then you'd expect further range expansion. You get that wick rejection at the highs, wick rejection reaction, push lower, short term push higher, overextended region, wick rejection at the highs. It's likely to push lower. That's the same signs what was shown on the 4, 8, and 12, which is your stabilizers time frames. Standard strategy is like all of them, and you just like factoring all movements into the pot basically. Like that forms your like narrative for like what you're looking for the given day. So yeah, look at this. This is just amazing to warrant looking for sells. So you got put wick rejection at the highs. You have a follow through with bearish momentum from like the high region or push the upside wick rejection. You do have that reversal slash retracement, and then you start to wick reject at the lows, and you have a reaction and push higher over to overextended territory. You're starting to wick reject the highs. It's likely to reverse lower. So then what you do is you then basically what you're then doing is you're just going to look to place sells like within the playable range what you've got, and then you would probably want to also look at like how the most recent like the next, for example, bar closes like, and then like go based on that accordingly. But basically what you'd just be tracking is you'd just be tracking non-religious overall structure points. You'd be plotting them out. So that's what we'll do. Like so of course it's probably going to take us to a point in time on this day where like you can see what's going to happen in a like after the fact. But like I don't trick myself, you know. So like for example, like, well, if you just mark it out, so you kind of got this, you got this, you got this, you got this, you got this, and then you kind of wick lower, and then you got this, and I would just kind of classify this as one move, and then you break to the downside. That is definitely not clean, and then you got this, and you're probably gonna break lower here. Like there's no sign. I'm just kind of guessing. There was no signs that suggested that, apart from obviously the high time frame narrative. And anyway, so you assess the break, you assess the non-religious overall structure, break to the downside, as of the candle that actually breaks, and basically see whether if it would retrace to the FVJ, if there was one, which there is, would it make sense to execute on? To be honest, based on the higher time frames, it would, but it doesn't, and it just pummels lower. And to be fair though, it does stay one leg, so you could possibly and I'm not I don't know, I mean, because like if it pummels lower, I guess with the DAX though, you're not really doing a USD JPY thing, so and then this could very well be a loss, but like it does remain one leg, and yeah, anyway, see, it does pan out. So like and yeah, so you could just enter like standard DAX strategy way, which would be obviously on the FEJ, and yeah, I would just wait for that, to be honest, especially when it pummels away and stays one leg. And yeah, you just have your stop there, and then in this case, I would definitely just target a 1 to 2, and then you get that quite easily. But then obviously this is your non-religious over structural low, and you just assess how that break looks like. So you're basically assessing like, is this high a broke lower? Would it make sense to implement 22 model on? No, it wouldn't. Probably break structure again anyway. Yeah, it does. And then you'd be assessing the same thing here. Would it make sense? No. And then this probably didn't make sense, but like you're kind of nearing the end of the hour here. So if there was an FVJ here, would it make sense to go it? No, it just simply wouldn't. And then you probably did wick reject, yeah, so you'd want to check the most recent bar close. So ideally, yeah, you would want to get positioned at the early days of the 1 hour bar close, at the 1 hour close, since you are kind of operating under a bullish tone, because like I've noticed too with the DAX, it tends to kind of just go based on the daily. It doesn't really tend to kind of factor in like lower time frames, but it also sometimes does. So yeah, here basically I would kind of, you know, when bullish signs are starting to show, I would probably just be looking for a clean bullish break. So we've got a nice little piece of the pie, let's call it, and I would just leave it at that for sells, to be honest. Although, you know, you're quite overextended or premiums, as you could label it, but I don't know. I think I would just be like, yeah, okay, possibly it does make sense to ride some sells, but there's not that compelling signs as I did go through and say whilst I was going through. It weren't that compelling signs of a possible retracement, to be honest. And then when you get quite a strong wick rejection on the 1 hour 7 a.m. bar close at the lower extended region, I should mention, of a push to the downside, it's likely that you know, further signs could possibly very well show. So if I just would just track it, and basically would be looking to be done by about 9 o'clock. So like, of course, like if it's starting to kind of look like something's gonna form, we'd be tracking and hunting the non-religious overall structure breaks accordingly. But yeah, if it's kind of just prolonging on, messing around by about 9 o'clock, then no, I will not be looking for anything. So here you can see non-religious overall structure break. Is it clean? It didn't look at really, just emulating in my head real time, but we'll see. Sometimes we're wrong. So it did look like it broke. Yeah, it did. So it broke as of this bar close. Is that clean? So if this on this break, would it make sense if there's an FEJ to look for a buy? No, it just simply wouldn't. It looks like it could easily get smoked. So you just keep tracking. You're not looking for anything on this one. You then do break to the upside again. Of course, remember the circumstances you're operating under. Now, would this break to the upside make sense to look for a buy here? To be honest, ooh, right, just right. So you got the break, right? Would it make sense to end? It actually probably would, but because you haven't have a huge stop, and even entering at this order block, right? Like, so see, it actually did play out, which I'm surprised at, to be honest. Does it run actually from here? Because I swear it drops. Does it drop? Oh, I don't know. But anyway, yeah, like I said, that's too big of a stop. So I would actually have looked to enter something like, so I've done this like emulating real time. So I'm not like picking and choosing, and I could easily have said, oh, I would have entered and took a 1 point. In fact, you probably would have even got a 2. I don't know though, but I wouldn't have entered there. So that's just whatever. So yeah, I would have been waiting for this. I would have been, because it obviously for it to stay one leg, and it was clean, to be honest, but the stop requirement was just too big. It just not clean. So, and then based on the stop loss size, I would have went for a 1 to 2, and yeah, and then yeah, but you know, you kind of, so we just look at this. Is this so? If you had this break, would it make sense to enter here? No, it's too spaced out and too large of structure. It's just not clean at this point. It is just really not clean. And then you're just tracking non-religious order structure. This is your high and low, and we'll just plot that out just so. And then you have a break here. Well, that's just definitely not clean. Obviously, that's your high. Non-religious overall structure, I remember. So I guess we can see here. Oh, wait, no, that's the break. So from the candle that broke, would it make sense to look at 2022 model? Just nah, just no, it's just too risky. And then it starts to trickle lower. So you get this, so I'd probably call it here, to be honest, because it's 9, and yeah, that isn't a clean boss either. Chalk either. Neither is that clean, and yeah, it is just not clean this. So yeah, nothing on this day. So that's basically what I'm looking at possibly implementing, where like, you've got the daily strong close thing, and then like if it makes sense to look for a retracement based on your stabilizers time frames, then play the retrace, but like play it accordingly like I did today. So if there's not that compelling of a sign, then kind of be wary with what you're doing. But there was signs there definitely to warrant taking sells, but yeah, you get the gist. So that's basically what I'm looking at doing. So riding the retracement to the open, basically, playing it accordingly with like top down market cycle phase analysis, like assessing the way recent bars close the way however they do amongst the regional whatever pushes in play, to determine what sort of movements are expected to unfold, and whether, for example, the market is indeed like set up, like, or not set up, but like probable, the expected movements are probable to unfold in the manner that would result in the market retracing to the open, for example. Um, or whether it would just make sense to like look for buys straight off the open, because I have seen that like sometimes when you have that daily strong close, all of the time frames or a sufficient handful of your time frames, your stabilizers time frames, meaning you're in the case for a 6 a.m. time period /7, you're one. Well, obviously you're one. It's always it's your dictionary, and then your 2, your 4, your 8, your 12 on daily. That's your dictionary. That's your stabilizer time frames for that time period. For 2 to 5, it's your 2 to 4, 12 and daily. So yeah, that's just context though. And anyway, um, yeah. So I have noticed that then if there's a handful of signs that also point towards, for example, further upside, then you wouldn't be looking to place sales whatsoever, because you're operating under quite strong bullish circumstances anyway with the strong daily close. And then yeah, you just look for a nice non-religious overall structure shift that's clean to implement 2022 model on, should it set up, if there was an FVG, of there is. And uh, and then place and then having a sell have a R target accordingly. So you got a big stop like you would have here. If you entered, you'd be targeting 1 to 2. But for example, if your entry point was like here, well, if it was there, I'd probably just have my stop there. So if it was about here, I'd probably look for a 1 to 3, and if it was about here, I would probably shoot for a 1 to 5. To be honest, that's quite a small stop. So anyway, I may as well just delete this. So yeah, anyway, that's what I mean looking at.